Hey, good morning, guys. Ken at Tortoise Capital. This is small group coaching cohort 3 for February, March, April, May 26, 2024. And let's just as a quick rules of engagement for Chi Wang, the intention is always to record these, but at any time you'd say, hey, I prefer not to have this part recorded. You don't even have to have a reason. We'll stop the recording. If there's anything that we say that later on we think, I'd rather not have that on the video, I'll go back and edit it. No problem. You don't have to have a reason. You just ask. We respect your your decision, and we don't need a reason. We're not going to judge. So we'll just keep those rules in mind. That gives us the most important element of true storytelling, balanced with the need for privacy and protection and whatnot. So, um, let's see what we got going. I'm continuing to work hard on the AI. I'm having to double check a lot of the basic stats that I've been running about gaps and critical states, really just to see if it can handle the prompts, and to see if it's accurate in its judgment. And it so far so good. It's directionally correct, meaning that it finds that there's no directional insight that comes from the direction of the gap, meaning that a gap up or gap down does not predict the follow through being up or down that day. But there is a persistent relationship between the size of the gap and the size of the follow through. It's not a huge edge, but it is an indication that bigger gap days have bigger follow throughs in the S&P 500. So I wanted to. That's the one that I check routinely every day. So that's correct. And then the I asked it to check the 10-day, 30-day, and 150-day critical location. So if it's in the up or bottom 10% of each of those look back periods, or any of those look back periods, then the next 1, 2, 3, 4, and 5 days have a larger than normal move. Again, not directionally. Well, it finds a direction. It leans for a continuation of the same direction, so that oversold for the next like 5 days, and that persists at 1, 2, 3, 4, and 5. So if it's oversold and it breaks down, we should really be pounding that one hard. If it's overbought and breaks out to the upside, we should be going long with those. There's a directional bias. It's meaningful at the 95th percentile. So we get paid to do that. And then there's also, I got to check to see if the adverse move, if the reversal move is larger than the average range. But what I wanted to do was just check to see if it could get those insights right that I can already confirm out of the spreadsheets. And now that I have the prompt correct, then I can start substituting other symbols to check and see how it does. I'm using the Claude 3 Opus AI, and it did that analysis in about a minute after each one of those prompts. That's what I mean to say that it is directionally correct. It finds the things that I'm finding, and it's drawing conclusions in the same direction that My numbers are finding. I just don't know if with the precision, if it has the precision down right. But if it's directionally correct and it finds at 95% confidence, then we know that there's some small but persistent edge there. And other, social scientists would say, hey, we want a larger effect. Um, but in my view, the with so many trading algorithms out there that are just finding patterns through data snooping, it would be really unusual to find really large, incontrovertible effects from statistics like that. Like the market um, wouldn't tolerate somebody being that correct all the time without the news getting out. Like other machines would detect that too, and so what what we're going to see is there's a lot of short duration momentum. So this confirms short term momentum for in the same direction as the overbought or oversold condition for out to about 5 days. That's consistent also what I see with like the 5 days down pattern and all those mechanical swing patterns. They seem to have, when they move, they seem to have a compelling condition for about 5 days, which is one of the reasons I like that 30-minute chart, uh, because it's easy. You can get 5 days of data on one chart, and you can see all of if you see the nice condition from the last 5 days, then you get 5 days going forward. And that seems to have some usefulness. I wanted to share something really quick on my screen to I I don't know if this will make a big deal in the way you're looking at things, but the just I added some simple daily shading to the daily bar, and it just looks really good. Uh, let's see, share screen. Yeah, let me know when you can see that.
Yes, I can see.
Yeah, so all I've done is I've just taken this is the blue box is the 10-day range, and probably hard to see, but those uh the daily bars are between the thin gray lines. But I add for the 5 day range, that's the red box, that's this one. And I started adding these subtly shaded uh daily ranges, the little white spaces, the gap. And I swear it really makes the the daily trends really pop out over the last 5 days. You get a real feel for that. But just like I was looking at Intel, and it starts off with this kind of sideways choppy at the top, doesn't really make a new high, bounces off that thick black line, which is the 30-day anchored VWAP, slowly crosses the 5 day. Now the daily bars get bigger as the momentum starts expanding to the next day and beyond. So that's like a 3 day acceleration to the downside after it rejects the 30, and then it crosses the 5 and the 3 and the 10. And then Thursday was part of the great big selling crescendo inside DIA. And then Friday was the recovery after an extreme move at the end of a 3 day run. So that's sort of that's the narrative that I have in my head as I'm looking at multi-day charts and trying to find turning points. And so when I'm scanning that list of symbols to the left there, and I'm looking and I'm rotating through there quickly, I'm trying to find conditions uh, like this one down in here, where it has an exhaustion move at the end of the day, where it's a huge distance from the 30-day and the 10-day and the 5-day, and it's come that far in a 3-day move. And then the next day it gaps up and then starts that to me that just feels like a new day in town, a fresh day at the circus. And that makes the entry for me in Intel this last Friday to be the low, a really low risk entry. Also, this one was kind of a low risk entry too, because it had 2 days of adverse movement and was really volatile at the close the day before. So I'm thinking it has, there's a lot of emotions in there from the people. And then it's a collapsing dragon essentially. And then that whole day was just directional. So those are the days when the multi-day narrative, if I can say it that way. Hey, it's the third day, it's the start of a third day of a 3-day sell-off where it had reversed from clear, it had reversed from clear resistance levels and is accelerating and closed the second day with a lot of volatility. And then the next day gaps down and still starts selling off hard. And then you just follow the blood trail. And then I'm ready after this exaggerated move. That's from 32.50 down to 29.75. That's almost a 10% sell off in 3 days. So the next day that has a big gap up and the market gapping up and going, then that becomes a low risk idea. I probably stayed too long in it, but the VWAP exit was my friend. So I've only been playing with this for a few days, but I'm noticing that on the 30-day bars, it really helps me visualize instantly that short-term swing mentality. And so this is the other thing that I would just show is the you can see the gaps. The white space in between those boxes is it closed here and then opened up here. So you can see that already when the market is closed is that white band in between. And for some reason, it's only on the 30-day or the 30-minute bar that the opening of what looks like a 10-minute or what opening looks like 10 a.m. That's actually the opening of the market. And this is the only time frame that it actually shows that on. So if you're using TC 2000, that's kind of odd. Anyway, I wanted to share that technique with you as a visual means of, quickly finding the movers, quickly getting a sense of the of what's going on in the markets. So I like that as a lens. Yeah. Okay. All right. Let's do a quick check-in. And I'm not sure everybody knows everybody. Some of you know somebody. So let's just do a quick 30-second check-in and we'll run through your check-ins real quick. And that's my check-in and work in progress.
Well, I'll start. I'm Damien out of Pittsburgh, Pennsylvania. Been trading since 2018. I've been with Ken for about 2 years right now. And that's basically a quick summary, I hope.
You're doing intraday. You're looking at the first 2-3 hours, 1 minute, 3-minute charts, one symbol, some of that. So we'll see that when we get to your check-in, but just as a way to quickly orient. Okay. Chi Wang, you want to go ahead?
Yes. So I'm cheering from Singapore. So I also follow Ken's about after the COVID area about 2020. So I'm mainly focused on the day trading. Last time is on 1 minute, on 3 minute. And right now, actually, I would like to focus more on longer time frame, like 10 minute, 30 minute, so that I can have can trade for more symbols. Yeah. Instead of 3 minute, which I can only trade for one symbol. So yeah, I hope.
Okay. Hamad, why don't you go ahead?
Hi, I'm Hamid. I am from Dubai, the UAE. I've been trading since 2010. I used to be an FX market maker, G10 currencies. That's when I started my career as a market maker, and then I traded LNG for a while, physical LNG, and then moved back to financial markets where I traded bonds for a while. For the past year, I've been working with Ken, and kind of 6 months before I started working with Ken, I set up my own company, Dana Investments, which is kind of startup hedge fund. So yeah, that's what I am. I'm working on EWZ, EWW, and DIA. My intention is to create an intraday trading system that generates an average of 2 hours a day out of these three symbols. And yeah, I just trade on the 3-minute charts.
Kyun?
Yeah, hi there. I'm Kyun. I'm based in the UK, and I think I started with Ken in Creativity 202, which is I really enjoy that. And one thing led to another, and I've started. Well, I've been trying to trade his system for maybe a couple of years now. Ken gave me a very simple system to trade. I think in December last year during the research weekend, and I've been really just trying to have a go at that now, and you see the reason for me to kind of join one of these things is really just to get some feedback with Ken, and to take it from there. I hope.
All righty, let's go ahead and jump in here. I've got a hard out in about 45 minutes. My wife has summoned me for family events starting in 43 minutes. So I shouldn't have used up all the time early, but there you are. All right, who's up? Good. Share your screen and check in. Damien, it sounds like you're ready.
Yeah, I am. I guess you can see my screen. Those are basically the stats, my stats of last week. I'm having a hard time dealing with the losses, and that's basically one of the main reasons why I decided to join the group coaching, is to find out how to reduce my losses. As you can see, from a minus 2.02 on average, I'm profitable because I have a very good win rate, but my losses are basically my downfall, and I haven't really found the solution of the problem. Probably a combination of bias and a multitude of other things. So that's one of the things that I'm dealing with on the short term. I'm in an adjustment. I went from the 1-minute chart to the 2-minute chart. And I'm going to go gradually all the way up to the 5-minute chart and maybe even longer. I'm not jumping right away from the 1 minute to the 5-minute because I tried it in the past and it was too slow. So I decided that I was going to do it gradually. And we're going to take it one step at a time and see what is going on. So that's basically what I'm doing for the day trading part. I'm also experimenting on the 1-day chart for the long-term portfolio. And it seems to be doing pretty well. I started that a week ago, and I don't know if I can show what I did I don't know.
Yeah,
if you
I
can-
just want to point out, we gotta
Yes.
fix those. If you are an intraday trader, we have got to fix those losses greater than 1R.
Yeah,
I mean, you've got, yeah, this is positive expectancy and you're at 4R. But there's 15R in losses greater than 1. That's the only problem I'm seeing here at all. We got to stop that. You got to have a hard stop and don't, don't delete it. Don't lower it. I mean, that's it. Put a hard stop in, and if it exits, take a 10-minute break.
okay,
Period. I mean, that's otherwise there's no amount of psychological shenanigans other than that. It's like, don't cut off your own finger with a power saw. That's not. We can't have that. Go ahead. Share next one.
and I agree with you, Ken, because on Friday, what I decided to do is I decided to move away from the SPY, and I traded something that was more volatile.
No,
I
that's
traded-
not what I said. That's
Oh.
not. You're not agreeing with me when you say that. What I said was on the thing that you're trading, put a hard stop in so that you don't take losses greater than 1R. I didn't say shift to a different symbol. It's not the symbol that's the issue here. It's not respecting the 1R loss.
Okay,
That's 15R beyond the -1R on a system that is 70% accurate and that has reasonable upside collections. Like your rule set exits at a 1R capture. So you're capping your win at 1. You're not capping your loss at -1. You can't have that. If you were going to do that, you with a 70% win rate, yeah, that doesn't work.
okay,
A coin flip that you win 2 out of 3 times, but you lose 4 and win 1, that doesn't work.
okay. Project for the week, 1 hour. Okay. I hope. I'll leave it at that.
The rule set. Yeah. Now go ahead and put the other ones up. I thought the check-ins were a good summary, and I want to acknowledge the work that you did there. The modified SWOT and the rule set, because it's a very clean rule set which shows a 70% win rate.
Yes.
So I want to if you can pull those up, I want to take a look at those.
Now, the other thing that I did is I did I'm trying to use your notes to be able to put my game plan together. I am not good with Excel and with PowerPoint and so on, so it's kind of messy. And I think I emailed you that, if I recall correctly, Ken.
Yeah,
Will
I
you
reviewed
review-
those and I wanted
Yeah.
to have them on the screen so we can get them into the video. I thought the
Yeah.
rule sets were good and clean, and the SWOT analysis looks correct from what I know of you, and
Okay.
it shows clearly that what we got to do is be decisive on managing and respecting the 1R loss.
Yeah. And those are the root sets so that you have them, for your record on the screen.
Yeah, do you
it-
have those available to pull up?
Yeah, I just put them up on the screen.
Oh, it's not on this screen over here.
It's not showing up.
No,
Oh.
we're still. Oh, wait. Yeah, we were still seeing the performance stats.
Okay.
The reason I wanted to see the system rules is because they're pretty close to what the other guys the day traders are kind of doing.
Now you should see them.
Yeah, we got them here. Yeah, so you're only trading. So you're waiting 15 minutes. So you're not going to get caught in the opening chaos. Trading only the PSAR flip with a limit order to entry, exiting after 1R, And then the second rule, if the trade reaches a 1R loss, exiting. So
Okay.
what you're really wanting to do is you're betting on the coin flip of the PSAR to be decisive. And the first R is not like a controversial condition. You know what I mean? The first move out of a PSAR flip is not an extraordinary move. It's just the move. It's just a natural size move. It's the width of the channel. If your 1R is approximately the distance between the last PSAR on one side and the first PSAR on the other, if that's approximately the size of the wrist box, then when it flips, for it to move another channel is not controversial. It should do that more often than it fails. And that's what the coin flip is really suggesting here.
Okay.
Now let me ask you, is your wrist box wider than the PSAR flip box?
What I use for the wrist box is the R10.
Is that wider typically on a 1 minute or 2 minute bar than
No, it's
pretty close?
close. Yeah, it's pretty
Yeah,
close.
that's what I've. It's this. That is also true on the 3 minute bar. So, okay. All right. Yeah. So that's really it right there. Is respect the stop.
Okay. Will do.
All
Can
right.
I jump in and make a suggestion to Damien?
Sure. Go ahead. Sure.
Damien, I like how you've, for example, on entry, you have always use a limit order. So you place your order and then the broker executes it for you, right? Why
Yes.
don't you do that in your stop loss? Why don't you enter a stop loss order and then just done?
Let it be what it is.
Okay.
Let the
Well,
horse run.
are you suggesting I'm a stop loss, or are you suggesting a trailing stop? Let's say like
Start off. I mean, it's up to you. But put a stop loss order in the system. Do not do it manually, like because
okay.
you would always have this bias.
I would make it a trailing stop because what if the thing gets to 0.99 R of a win and that's where it fails and it retraces 1 R? Are you supposed to stop and reverse there?
If I go for the week, no. If I have a loss on the first one, I will take the reverse. Yes.
Okay, so is that a manual decision that you're making?
Yes.
Does your broker allow for automatic stop and reverse?
I can program it, yes, because I have the information to do it from Philwoo and Abletech and so on. Yes, that can be done automatically.
Yeah, so this is essentially your trade. Oops. And so I would be I think I would just trail it with I wouldn't exit at 1 R on a winning trade, by the way.
Okay.
So if that goes up, you're exiting right there. I would just trail that, you know. Here's what I would do. I would move that to here. And then when this gets to 1.5, I would just trail with 0.5. That looks very much like a frog entry. It gets to 1 R, you've locked in the win. You move that up to 0.5 and then trail with 0.5 the rest of the way. What if you get the runaway move? 1 out of 10 times. That'll capture it.
Yeah.
And then if you make this, then I wouldn't exit until it I wouldn't stop and reverse unless the first break occurred. Like I wouldn't stop an exit right there. There's no signal there. There's no chart pattern that suggests it's a reversal. All it did was simply pulled back and it was a money management stop. But the one where you should be shorting is this. So if this goes up and then reverses down through here, that's where I'd exit.
Got you.
But the reason I say you want to be, especially on the short side, I mean, the reason you want to stop and reverse is because you had several losses that were -4 and -5. What that tells you, if this one's going this way and reverses the other way, there have been 4 or 5 trades out of 20 that had catastrophic trades in the other direction that you're not getting. So that says that the stop and reverse is interesting, and the size of the move on those big decisive moves is much greater than 1. And you're kind of arbitrarily, I think that's more of a psychological capture because you want to win in R, which is fine. So there's really 2 pathways on this one. One of them is kind of refined exit, refined trail, and reversal. And the other one is just keep the plus or minus 1R because you got a 70% win rate. Keep that, but then respect -1R. So this one deals directly with the psychological element. This one is based on the fact of the price performance in your data set, which says that you're not exposing yourself to large gains when it works. And when it reverses, there are large moves in the other direction. And this is a combination of a psychological problem and a rules problem. The psychological problem is not respecting the 1R loss is exposing you to these. That one of those is killing 4 or 5 good trades.
Yeah, I agree.
And then the second part is that there's a relatively reliable large move happening that capping things at 1R is not getting. Like if you're getting 4 or 5 of moves of that magnitude within 20 trades or 30 trades, that's a pretty significant, that's 1/6 of the trades. So what you're doing, what we want is a histogram that locks in losses at -1 as the very first principle. Nothing larger than a 1R loss. The second thing is the out to +2 is having an orderly, normal looking curve with about 85% of our trades between -1 and +2.
Okay.
And then having a fat right tail. And if our numbers are right, then that would be about 1/6 of the time. But what we've got going on here is that your exit is cutting off the gains right here. So you're not getting any of these. And then the psychology is allowing this to happen. So the histogram is on the wrong side by design and in practice. Now,
Okay.
if this was truly mechanical based and you were just betting the coin flip, then we would have, all we're really doing is we're saying between -1 and +1, how often does a PSAR flip move 1R before it reverses 1R? And we've seen that there are moves that go 3 and 4R. So getting that first step out of the station, you're showing that is winning like 70% of the time. So just respecting, even without even chasing those exit, the fancy exit rules, just having that thing locked here and locked there, when it enters here, there's the break. It says, hey, 70% of the time it does that, 30% of the time it does that. A coin flip, a 2-to-1 coin flip that pays 1-to-1 all day. So, so make a decision. I would actually start with this one and fix the first closest problem, and that is respect the 1R loss, and then take a 10-minute break so you can get back to the zero state. Because it's a psychological reason that you're not respecting the 1R. So you gotta take your medicine and then take a walk. And come back when you're in the zero state. Period.
Got it.
When
Well,
you do that, the direction we're heading in is monkeying around with the exits to get the possibility of the fat right tail. And that one is going to trigger by if it gets to 1R, is keeping a piece and letting it run, just so you get used to the idea of making bank on 80% of the position at 1R. That locks in 0.8, and then just keep a fraction and then just trail it with a half an R, and then you can see how far that rabbit will run. And that's very close. That's very close to the original frog rules. So start with the first things first. Okay, next.
Can I go?
Yes, sir.
Okay. Sharing screen. All right, so can you guys see my screen?
Yep.
Okay, cool. So as I said, my immediate goal is to create a system, an intraday trading system that generates an average of 2 hours per week.
Hey, watch this. I'm going to show you something. Highlight the cells A1 to like O19. Just highlight the text. Just drag it from the inside and then go to the right so all the text is covered.
Okay, sorry.
Contained.
Yeah.
Yeah. Now go to view. Selection. Yeah. Zoom to selection.
Zoom to selection. Okay, cool. Oh, that's better.
What's that? How about that?
Yeah. So create an intraday trading system that generates an average of 2 hours a week, and I want to move it from prototyping to limited production. The focus will be on DIA, EWZ, and EWW, Mexico. So my current focus is 100% efficiency in executing in EWW, EWZ, and DIA. And then the second part is working on my Cornell note sheets. I started working on the introduction and the themes. And I think for next week, what I want to do is I want to start also, for the sake of completeness, writing Cornell note sheets on basically Q1 of 2024, just to make sure it's all complete, because I realize that in my Cornell note sheets, I don't really discuss the VWAP. And I think that's an important aspect. So I'd like to cover the rest of the videos. I'm going to start with that next week. And I've also kind of improved my trading process. During the first week, I kind of was just testing things out with EWW, EWZ, and DIA. And I think in the next week, I kind of refined my rules and kind of, tailored them a bit more specifically to what I was trying to do. And I think for me, one of the biggest, let's say, breakthroughs this week was, trying to mark the trading ranges, the intraday trading ranges, so that I don't get caught in the chop. And I think what I suffer the most is when price gets choppy before the Z3's pinch. I kind of lose sight of the Z3 lines. I'm just going to put up my chart just
let me show before just in case. if you had something like an SQC or whatever this is here, it doesn't matter, but where there's a clear break where you start getting a directional move. And then when that thing starts to roll over, you'll see the Z3 lines most clearly, but you see after a range expansion, it starts to converge
Yes.
before it gets into the Z3 pinch.
Mm-hmm.
So my spider sense is that this turning point is that this is the area we're getting smoked. It's now officially an chart of interest. So we got to avoid this range compression. This is the place where all breakouts fail. And you start seeing lower highs and lower lows until it gets into the converging channel. So this is where the crocodiles live. And whatever this breakout was, whether it was an SSC that breaks out and goes, or whether it was just a Z3 pinch and go. This is this is like fake one, go two.
Yeah.
So this might have been go short, scratch, and then take this long. This has to be whatever that channel is, that had to be one of those, so that when it reverses, you can re-enter at the southern side of the channel with a full risk. But the point is, this is where the money's made.
Yeah.
Because in this period, the teeter-totter was tipped, between buyers and sellers. It was even. And then somewhere in here, in this case, some guy with a bag of money came in to buy. And he gets heavy, and then that causes him to go down and price to go up.
Yeah.
So this makes us want to keep going caught at twos. And if that caught at two works, then of course we're just going to keep going. And that's what's happening when this thing works, is you end up getting the first leg and then a couple caught at twos. But really, the thing to watch, I'm going to draw the RL30. That's the health of the trend.
Yeah.
If that RL10 is going to keep going, this thing should keep going. There's enough chop around in here that the RL30 rolls over, and then this is the last criteria for the owl. And the owl is telling you that the downward move back to what's going to be the Bollinger Band mean is the trade. So look for there's two things I want you to be observing for. One of them is the turning point in the RL30, and the other one is the turning point in the Z3 Bollinger Band that's going in the direction of the trend. Right? Because what you'll see is the lower Bollinger Band initially goes down. As this goes up, this just widens.
Yeah.
But then, because it's a directional move, you got the middle of the Bollinger Band mean is here, so you're getting +1 and -1. And as this keeps going up, the bottom Bollinger Band just keeps going until it connects back in here. So this thing doesn't give you the signal, but the direction that the price took, this Bollinger Band rolls over when it stops going up and it starts converging. So one of those two things is going to be, I think, the indicator that it's either going to be the Bollinger Band in the direction of the move rolls over, or it's going to be the RL30 slope comes into the 12 o'clock position.
Yeah.
And then when that happens, I would just go leave. Leave, go somewhere else.
Yeah.
Let the waiters, let the wait staff and the busboy come in and clear the table and get it set up for the next diner. You know? And then I think I gave this guidance to Kevin R in cohort 2. He's trading 3, 10, and 30. And he's getting bored with EWW. So I think I told him and Jonathan also to have DIA on the 30-minute and EWW on either the 3 or the 10, whichever one they were trading, with about 80% of your attention on EWW because it's going fast, and that's your primary production symbol. And then about 20% of the attention on DIA, but it's going slower. That's like if I was driving the car, I'm paying close attention to the guy behind me and the guy in front of me. And then I'm looking at DIA as the great big truck that's going to make me do something in my lane, you know.
Yeah.
And that way you're not trying to balance 3 symbols. You're just occasionally checking the mirror to see how the market is doing. And then if EWW and EWZ, remember, because you got the US, you have Asia less Japan, and Japan, and you have Europe, and you have tech and all that junk in here. EWW, EWZ are not part of that cluster. They're over here in the emerging markets
Yeah.
doing their own thing. And so you'll see a lot more oscillation up in here, but these tend to be more directional. And when they are, you'd like the 3-minute or the 10-minute to be to let them get that early move and just go, because 2 days out of 5, they're going to have a huge directional move. And then you don't even need to trade DIA. So I would say put your primary focus on those two. I'd start with the one that gaps bigger. Or if you're looking at that, like I showed that 5-day narrative, and like if EWW did this, well, then this is the day that you want EWWs, because the thing is crusted and now it's given this downward move. And if it breaks, it could be big. Whereas EWZ might have had a big move early in the week, and now it's just it's got 2 days in a row of just consolidation. Well, the one that moved the most the last 2 days, that had the biggest directional move, I would argue is the most likely to be the bigger mover, because it's at the day 3 of a directional move, whereas this one is still going sideways and you got to see a breakout. Well, I would be looking at this one because it's already moving. It's in play. That's where that multiple day look can help you pick between these two primaries. So if you focused on those two, one or the other, and then just keep DIA in your rear view mirror or looking way ahead, so that if neither one of these moves, it may be time for the US market to move. And if that's the case, you'll spend an hour watching these two chop around. And DIA still has 6 or 7 hours to make a long, decisive, conservative move. You'll be all right. So those are the things I'd like you to be thinking about over your next 2 weeks, is watch either the Z3 turnover or the RL30 turnover as the signal to leave the table, let the waiters and the busboy come in and reset the table. So just think of that as the reset button. One of those two is going to be a good reset button which starts with the letter R. And
My
then-
question.
And then
Sorry.
pick up the when it gets into the, start stalking it again when you see that compression. Go ahead.
So usually when these turning points happens, that's when you get SSCs and SFCs.
Yeah, yeah.
So
Especially, yeah. Now that's the other thing I want you to notice too, is that I think Friday was a good example. There was a sell off and then a gap up, and then this little move here was not much at all.
Mhm.
And there was a lot of trades in here that you're labeling as SSCs and CDs, but the SSC requires a harsh winter, 1.5 frog boxes, or 5 R10s. So a clear directional move, which when you look at that, you should say, man, I feel dumb that I didn't get that one. So just let your self despair, let that be your signal that says, oh yeah, that was really a harsh winter. Now the SSC has a chance to get back to what was the previous truth. The harsh winter, always surprising. That's the one that allows this. And maybe the second leg. I think when you start looking at your chart, you're saying this period in here is not getting a big move in one direction that allows the turning point for the second mouse. This turning point, and a turning point with a tight stop, requires a symbol that's in play. Somebody had to win decisively here to really set up the consequence trade, the second and third order effects. And one of the reasons we want to watch for the Bollinger Band mean turning is that in this period where it's converging, these follow-through moves are not large unless that first move was huge. That's why I would take like the first one going the other way, but that's all. If that doesn't pay off, then you don't have kata twos. You got to have a winning trade for kata twos.
Yeah.
The kata two says that after an SSC that worked clearly, now the buy on dip
Is in play.
can really go. But all of that sort of requires that this was a win. The psychology of the win is what gives energy to the next buyer, which is us and everybody else that either wants to add to their position or wants to buy on a dip. They had to see this. That has to be visible. So a little thing that's doing this, those aren't kata twos, those aren't SSCs. They're not in play. That's what the Crocodile River looks like. So that's part of what you're examining is the Bollinger Band mean reversal and the RL30 rollover. Is that a reset button for us, for you? And then take a look at EWW, EWZ as your primary money makers, with DIA as the alternative. If the emerging markets are not working, then maybe the US is making a slow, steady move.
Okay.
And the reason to pick DIA is because that one doesn't explode out of the gate like tech. In the future, those three, I'm almost ready to say XLI. Those four can have decisive moves the same way EWW and EWZ are. So the S&P might be on a really slow roll up, and it's doing this crap. But you've got the 9 sector spiders in here, each narrowly focused, and one of those 4 is the one that's providing all of the power to pull the rest of it up. And many of the other ones are either selling off or monkeying around. One of those is going to be the key leader on any given day. And XLI is actually not large enough percentage-wise to pull the S&P in one direction. The three biggest are finance, tech, and energy. Those can actually pull the S&P in one direction or the other. Usually it's XLK is pulling the market. But if the market is up but tech is down, I guarantee you finance or energy is the deal. That's what's happening. Anyway. I didn't mean to hijack your briefing, but yeah, I actually did. Yeah, and I think that will help with this.
Yeah. Yeah, because when I was looking at my stats, my win rate's actually quite good. It's at 0.9. Sorry, the magnitude of my average win is 0.9, but my
Yeah.
average loss is, what is it? I'm just gonna put it up right here. It's so yeah. If I just zoom in a bit. So yeah, my average win is quite good. Like this is one of the best average wins I've got. But
Yeah.
the win rate is quite low, and then I'm taking a lot of losses at
Yeah.
0.5, and that's basically getting locked up in the chop, and trying to make something
Yeah.
work that's not working.
Yeah.
So
what I
yeah.
do on the 30-minute bars, on the 3 minutes, like for me, the 1, 2, 3, on the 30-minute bars, I'm almost treating that like a daily bar. Like if I see that, I'm ready to do that.
Okay.
Like if this opens right here. And now the question is, it has to be like a universal entry. That's exactly the name of it, is the universal entry. Is that if that goes, yeah, it basically has to break out of the doji. On the 30-minute bar, because you only got 13 of them,
Yeah.
I'm taking that one with something like this as a risk box, just by visual inspection. And then this doesn't have to move far. For me, just to kind of quickly do that.
Yeah.
And then say, what's up? When you're trading, and that's for Chi Wang also, is if you're looking at that large stack, and I'm trying to get, I might have 9 or 10 charts. These are like little thumbnail charts. I can see that pattern pretty easily on a smaller chart and just get it going on the 30-minute. And then if it starts, I can see from the ones that are in play, the ones that are really working. And that's the one where I will then drill down to the 30-minute or to the 3-minute. And then I would say for Chi Wang, because we're going to see you here in a minute, I still like this stack here, EWW, EWZ, DIA, sort of as how to manage multiple time frames and multiple symbols, so you get used to the practice with using your instruments and whatnot. But XL, K, E, and F, those are pretty darn good. And then this might get you to hey, NVIDIA, AI, Intel, just because I'm just a sucker for a and then I might say XLB so that I can get AA. But this energy gets me to Devon. And then on F, I wouldn't even mess with the individual banks. I would say either KRE is the regional banks or FAZ, which is the triple leveraged finance. That way you're just playing the sector and you'll get a big move. So already, this is CLF too, yeah. So I'm already at about 10 or 12 symbols. And I just put the other ones on because I was getting sniper things like, CVS and 3M and Merck and Palantir, ELTR. I have a belief in Palantir and AI because I'm tracking those things as part of a longer term exposure to AI. My longer term exposure to AI is Microsoft, NVIDIA, AI, Palantir, and then out of the crypto, ETHE. So those are my 5 long-term game changers that are also liquid enough to trade. But I have a strategic plan for those. These two are really small caps that could explode and be amazing, and they both have connections to Department of Defense. And we're going to be dropping billions into AI, and those two are postured to really benefit. And then Microsoft is going to be the world leader in applied AI for the consumer and generic business. They just are. They figured it out. And then NVIDIA is going to go to be it's going to be the first $5 trillion company, I think. So I've been buying shares of that I will never sell. And my kids are buying shares of that. And last night at dinner, my daughter and her boyfriend, who are both medical technicians, they said, "Wow, Dad, you weren't wrong on NVIDIA." I said, "You damn right." I had them buy it when it was at 850, and then told them to buy some more last week, and then it had that blowout earnings, so they think I'm a genius. Anyway, so those 5, because I always want to be monitoring them, and I'm trading them with a core and turbo approach. Those are in my stack also. That's why they're on that list. But I've got those other things that are in there that have just appeared because of I think like IP, because those all came out of snipers, and it turned out that those were these industrial companies or pharmaceuticals that just had really good trading characteristics. So I get bored easily. So my list has grown to 30, which is about the limit of what I can manage. But you don't have to have 30. I would start with that first set of 10, and I would start with use 1 to get your patterns down, then get these 3 so that you can pair trade those, and then look at the longer time frame for the US market. Then I would add the things that are moving the US market, K, E, F, and maybe I. And then I would look at adding some of these other specials if you need to. I don't think you necessarily need to, but that's how that stack of symbols has come about for me over the last probably 5 years. Before, 5 years ago, I was running all the screens and filters and coming up with, new swing trade patterns plus the old reliables. And now I'm almost not even doing that unless it's a swing pattern on one of my trading stack. I can't even see them anymore unless it's already on my stack because I'm just getting old. I still think that's a valid way to do it. I still now prefer the sniper as a way to identify new short-term targets. But until you guys kind of, I think, until you kind of master those, I wouldn't do that. What I really want to see is one of my buddies on a sniper pattern. Then I'm going to have my best day of trading. Anyway, let me clear that deck, and I got to. She's, I can, I can endure another 10 or 15 minutes before she murders me. All right, I think Hamad, you got your marching orders. Chi Wang, what you got?
Okay, let me share quick. Yep. Okay, let me know when you can see my screen.
You're good.
Okay. Yes. So basically, yeah, let me run through quickly. So my goal is to generate 50% of win rate. Average win versus loss is 1 hour versus minus 0.5 hour. Number of trade is let's say 10 to 20 trade, and so average hour will be 2.5 to 5 hour. So recently I'm focused on the 10-minute chart because of actually this is what struck me is what inspired me to look at 10-minute chart is what you told Kelvin on the floor to the last podcast. Because when I trade 30-minute, I found that the bar is a bit too wide and I don't know how the entry. So 10-minute chart is like giving me a more price action. I can see more clearly like the especially the RL10 the range. So yeah. So at this time I decided to check on the 10-minute and I found it's quite orderly and I can manage about 10 trades together. So a bit on the more details like the bias, basically I will follow the RL10 the slope. I'm checking the RL10 versus the baby dragon. If the slope is positive, I will go long, while the slope is negative, I'll go short. And the other thing I also will look at is the VWAP. Is the price stay above the VWAP, basically is a long. So if I entry a long position, but it's get below the VWAP and it continues to be below VWAP, I know that it is something wrong. I'm on the other side. So then I will quickly exit it and so yeah. So this give me some bias on whether to go long and short. And also for the entry also basically is the with the large gap I will trade also the OR10 and the rest of the symbol I will wait for 30 minutes, let it settle down and trade the patterns like K2 CD and the ED. So while for the exit here I will trail with the R5. So something for me when I use the trailing stop is really I don't really care much about the exit. As long as I will check my profit and loss. If I'm still trade is a profit, basically it clear my mind. I wouldn't really, yeah, I just accept it and I make it more less nervous, more calm during the loss because I know that basically it will be capped at the 1 hour and it will just automatically trail. And if the trend is good, and basically I'm surprised with a large gain. Yeah. So also to whether to carry overnight, basically it depends on the risky and also the whole market sentiment. So if the risky is rising, basically I will allow it to carry overnight. I will still chill with the R5. If it's not exceed, then basically I will let it carry overnight. While during the other one, where if the risk is falling, basically I will close it 30 minutes before the market. Position side. The other thing for the exit also basically, if basically I'm only checking the R10 slope. If the R10 slope is reversed, then I'll pull up the chart and I'll check. I'll see whether I will either use the dragon as the guide. Yeah, whether to exit. So yeah, I think
Yeah, that's exactly what. Yeah, I'm noticing this too. You know, when you get that SSC and it's long, the PSAR dot exit.
Yeah.
Is always lower than the dragon on these kind of moves when it's working. And when that
Yeah.
little thing hustles, man, I just jump that up to the dragon right away.
Yeah.
Yeah. And that this little extra piece, that could be 0.5 R. That is such that the extra boost that you get from this when that signal happens, and you immediately jump that stop up to here, the extra boost you get from there more than compensates for whatever you're giving back with a simple trailing stop. It really does. And that when you just accept you've decided your intention is to be satisfied. You got to actually program your mind to say, I declare that I'm going to be satisfied with whatever my trailing stop gives me, and I'm going to accept whatever it was with grace. And I'm going to give gratitude and forgiveness no matter the specific result. And that's going to lead to serenity and peace of mind. And that actually helps me see things more clearly. So what you're doing is, instead of getting caught up in the chaos of tactics, that serenity and peace allows you to be up in here. And from that mountaintop, you can actually see the next direct. You can see that, hey, when this Z3 pinch is over, I can now see the time to re-engage for the next one. So there's actually a very practical reason to cultivate that value stream or that emotional state of mind, is because the peace of mind and serenity that you get from doing that based on your intention. This is like before, during, and after, right? Before, I'm going in with the stated intention. My during is to allow the rules to work as stated and not second guess them. Let the driver drive. Stop talking in the back seat, monkey. Work on your acceptance, and then afterwards, acceptance and gratitude leads to serenity, peace, and vision. And now you're above the clouds and above the crowds on the mountaintop, which gives you the vision to see where the next target is. Is it EWW? Is it EWZ? This is where you're looking at the longer term stack of symbols and see who are the new leaders in the crowd, or the new candidates for most likely to be my next trade. You're watching the next crowd moving towards you. What's going on with that? Don't let me try to figure out what's going on in the crowd being in the crowd. You got to observe the crowd from a distance and not caught up in its, and just observe it dispassionately. That comes from serenity. That comes from this whole food chain, and it comes from letting your rules be your rules. Yeah, and I agree. The 10-minute chart also feels like a good balance between 3 and 30. I may just add that to the nightly podcast. I'm getting bored with the 30-minute. Maybe I'll do the 10-minute. See what we get. Maybe I'll start adding some 10s in there too.
Okay.
So, yeah. So I think you're in good shape here. And the good news is, your 50% win rate that pays 2 to 1.
Yeah.
That's
so
already what Damien is doing if he would take the 1 hour loss. Only he's
Yeah.
got a 70% win rate. And you're pretty close. You're pretty close to the coin flip now already.
Yeah.
That's yeah, this is pretty close. Pretty close. And then this is pretty close too. Because you're almost with a little tweaking, you're almost 9 to 5. That's almost 2 to 1. That's so close, it could already execute. So with just a little tipping point, we would end up seeing that a little bit smoother. You'd end up seeing that look a little more like that. But this is good.
Okay.
Yeah. And then there's your fat tail starting to emerge. So we'll see. You're really close.
Okay.
Now, how many of the 10? Now, where are you in developing your stack of 10?
No, basically, very similar to what you draw just now, like the EWW,
Yeah.
WZ. Yeah. Basically, if I can show quickly, basically I
Yeah.
have a basically I have a chart here. Basically, this is I put another screen. So this
Yeah.
is SPY, the BEKFI. I will see which sector is going.
Yeah.
Then I will jump into the sector. So then the other stack I have is mainly like the NVIDIA. Yeah, basically
Yeah,
is
okay,
your
yeah, there you go. Yeah, so
Yeah.
what I like to do is I like, this little stack that you show over here, which I think has probably too many. Although
okay.
I can already see why. If you like NVIDIA and Intel, I appreciate why that should be on there. And so these are the ones here that just came out of the and I understand why you got that one. This one came out of because semiconductors, freaking McDonald's, just because
Just there's something in the
McDonald's,
market to
Coke, Home Depot, that's America. I mean,
Yeah.
god dang. When the XLKs and the E's and the F's of the world, that's the kind of mainstream America that just wants to go. And when they are on sale, I really like them. So yeah, I understand why the only guy that I can't stand is him because I hate Zuckerberg, but that's a psychological problem I have. Not that it's not tradable. I just have a psychological problem.
Okay.
But yeah, I
It's quite
understand every one of those
volatile
things on
though.
that list. Yeah.
Yeah.
I like having this stack on my screen. So on my big screen, it'll look like this. I'll have that stack always visible
Yeah.
and always sorted by the percent change.
Yeah.
So that
Yes.
when the market is going up, all the good ones are at the top. And then down here, I'm looking for red to turn to green.
Okay.
Like if it was horrible and then suddenly something that had been losing money turned into green, I know that instead of going down, this thing reversed. And so he might be climbing, he might have had that SSC.
Okay.
So if something was at the bottom and it starts flashing green, I said, okay, I like that.
Okay.
And then I
So
can always, that's sort of my distant radar. In the same way that I've been describing the use of DIA as the market and then concentrate on EWW, EWZ. I have about anywhere, 9 to 12 symbols on my little thumbnails. And I use this one to just get a feel for the market. And I
Yeah.
always know where SPY is. And then I can pull things from here onto my quick screen.
Okay. Yeah. So and also basically I put also the R10 slope over here to let me know that whether it changed from green to
There you
red,
go.
it means that the long position. I
So
have to
was that the slope?
no, the R10 versus the baby dragon.
Is it what?
R10 versus the baby dragon, the SMA3.
Oh, okay. Oh, here's
Yeah,
what we
that's
got to
all.
do. Here's what I got to do. Imagine if if the slope of the RL10 was up,
Yeah.
if that was green.
Yes,
And then
correct.
if the slope goes negative, it goes red. Is that what you're doing?
I compare with the SMA3,
It's
the
pretty
baby dragon.
close. It's pretty close because look, you got AMD. That
Yeah.
slope is
correct.
negative.
Yes.
That I got to think more on that. That feels really smart.
Yeah. And
Like
the
I like this already.
yeah.
What would that tell you right there?
SSC.
Yep.
Yep.
Especially
So
when the market was positive and these were negative, but the
yeah,
R10 just reversed.
correct.
Bing.
Yeah. So you can see here it start to have a SSC.
There you go. Now imagine if we had a PSAR, green or red. Slope is
Oh.
down,
Okay.
so it would be red. And RL10 is below. So
Okay.
you could see pretty easily. And Danny has done something like that with the so if you had like 3 criteria, slope of the RL10, below the PSAR decaying, that tells you that you're going to go long there,
Okay. Understood. Good.
I think.
Yep.
With your auto frame right there.
Mm.
Target 1, actually target 1, target 2, target 3. Devin Energy, that's my boy. Yeah, man, she's gonna murder me. All right, what else you
Okay.
got? I think you're in
sorry,
good shape. You're very
yeah.
close. You're very close. I
Mm.
think this is just a matter of refinement.
Mm.
And this is why those turning points in the yeah, 5 minutes, dear. This is those turning points, that narrowing, and then the expansion. Now it just happens that this is the gap. So, and that's why the big gap says, aha, this is in play.
Yeah.
Lower
Right.
highs,
Yeah.
bam.
areas.
Turning point, caught a 2. I'm probably long right there.
Yeah.
Just the 1-2. With a tight stop and hold my nose. And then turning point, beauty. And then crosses the VWAP, crosses the Bollinger Band mean, crosses the PSAR, collapsing dragon. Man, we should be murdering that trade. Murder that trade.
Yeah. So for 10 minutes, you can see that you
Yeah.
can see quite clearly. It's quite orderly. So
That little logic chain right there, that might even be better than EWW if I'm being honest. But man, is that any good?
Yeah.
All right, let me hit
Yeah.
Jen real quick. What you got, buddy?
I don't think I can go through what I need to go through. Actually, there's quite a lot. So I'll just give you my goals and then we'll take the rest another time. How about that?
And I'm gonna always be here every Sunday anyway. So if you want to reset
yeah,
Sunday,
yeah.
or if you want to,
I-
if there's a better time, like during the week, if you want to catch,
I'll drop you a line. I'll drop you an email on that. I'll just show you my goals.
let's do the goals.
Actually, or do we want to do that instead, Ken, rather than even start?
No, let's do the goals and get it locked in so these guys can see where you're at.
Hopefully you're seeing my screen. Okay.
And got it.
Can you actually see it? I mean, it's large enough.
Yep.
Okay, so so really 12-month goal is to find a system that I can trade, systematically, robotically, even, with consistent profits that fits into the lifestyle. Kind of near term. So you gave me a kind of system, so I need kind of feedback and evaluation and tweaks on that. So that's the near term goal. Second point will be to get some clarity on in the market. So by that I mean the symbol I'm trading, which is GBP USD. Is it even the appropriate symbol to trade? Because I will expand on that because of the timing and etc. etc. So to get some clarity on that, you've already given so many thoughts on other symbols. So today, then the system that I've been trading, whether it's what I need to do with the rule sets and what tweaks. And I'm gonna take it real slow. I'm not gonna make many adjustments at the same time. I find that
Yep.
works for me. So that's on the system side. Okay, thanks for that. So on myself is just, I even said it then, evaluate issues with trading the system, whether there's any issues with myself on trading the system.
Yeah.
And what adjustments I can do, basically. That's it really. And so
I think the BMR working group is correct for your long-term, relaxed,
okay.
decisive strategies. The
Yeah.
crypto BMR should give you just enough excitement for speculative, exciting, explosive moves.
Right.
And then that Forex intraday, that's what Brian is doing with the 5 minute. He's using actually a couple currency pairs, but he's also doing XAU US dollar, the gold spot.
Okay, all right.
And
Where's
I'm
his video?
telling-
Is he on the
he's posting on the nightly chart or the nightly charts.
Okay.
And he went through the foundations and sort of refined his system in that way. And then went into a cave for about 2 months to really work on himself and his system. And he has been, so if you go into Campfire
Okay.
and use the search function for Brian,
Yeah.
you will end up seeing his charts in a long list. And
Okay.
it's worth pulling those together and looking at his numbers. His expectancy is up around 0.7, and his histogram is very disciplined. It's looking good. Knock on
Okay.
wood, all that shit too. Yeah,
Yeah,
I think you're in
well,
good shape.
Okay. Yeah, we'll catch up.
Yeah, and then if you
Okay.
want to do another, just drop in on another Sunday. You don't have to wait a month, just whenever you're
Yeah.
time. And
Okay,
if
cool.
you need something entered during the week, just give me a shot. We'll figure something out.
All right. Okay, great, Ken.
Yep.
Okay, thanks, and have a good day, all of you. Well,
Certainly.
maybe not.
Hey,
not
take good
much.
care, guys. I'm gonna get this published and posted and hung in the course. And you wish you guys well, and we'll see you shortly.
Thanks.
Sure,
Cheers.
everyone. See you next week, I guess.
Good work today, guys.
See you.
Hey, the one on the Serenity Mountain, that's the first time I've said it that way. I really like that picture. That's going to become a decisive lesson. So thank you for helping me see that. Cheers.